Welcome to the Standard Deviations podcast, presented by Orion Advisor Solutions and hosted by Dr. Daniel Crosby, Orion's Chief Behavioral Officer and New York Times bestselling author. Each week, Dr. Crosby interviews a fascinating new guest on a range of compelling topics, from literature to psychology to financial wellness. To learn more about Dr. Crosby's behavioral finance work at Orion, visit www.orion.com.
Hello and welcome to the Standard Deviations podcast. I'm your host, Dr. Daniel Crosby, and I am joined today by a very special guest, Eric Clarke, CEO of Orion Advisor Services. Welcome to the show, Eric.
Thank you, Daniel. It's a pleasure to be on the podcast with you today.
Absolutely. So, full disclosure, Eric is my boss. I think in the service of good media, I think that needs to be said. But Orion, Eric, has become a huge player in the fintech space, now serving over 2,100 advisory firms with over $1.3 trillion in assets under administration, 75 of the top 100 independent BDs. But this all started as a family business in Middle America. So can you walk us down the path from family business in Nebraska to the great heights you've ascended to today?
You bet. Happy to do that. And, not to go too far back here, but, my father broke away from a regional wirehouse in 1973 because, essentially he felt that mutual funds were a better investment vehicle for most of his clients than individual stocks. And, his entrepreneurial spirit and desire to put the clients at the core of everything that he was doing at that time are, still values that we hope to continue to emulate as we sit here some nearly 50 years later and carry on that legacy. And, we've obviously evolved the business over time to where we are today. And, looking back, I think that my father was an industry pioneer in so many different ways. And, he started to help other advisors in 1991 work with their clients, both as a fiduciary and on an advisory fee basis. And as the business grew, he was operating a turnkey asset management platform. At that time, we desperately needed better technology to support the growth of that business. And in December of 1999, after we worked as a team to pull together a pretty aggressive business plan, out of necessity, we created the company that today is Orion. And while we've had a lot of success over the years, I would attribute that success to those values of that entrepreneurial spirit and always putting the client first with every decision that we make. The same things that were driving my father to leave the wirehouse, back in 1973.
So when you say pioneer, he truly was. Now, my father is a financial advisor and came up through the wirehouse ranks. And I was born, my father was mowing lawns, and he actually got his job as a stockbroker at the time on the day that I was born in late 1979. And I remember as a young child definitely talking with him about individual stocks and the whole business model. I mean, I remember this from being a young child. The whole business model was sort of slanging individual stocks and stock tips and what do you have for me and what's the hot dot. So he absolutely was a pioneer. And I think that DNA of customer obsession, client centricity, and doing the right thing is absolutely a part of the Orion DNA today.
Yeah, I would agree. And I think we had very similar upbringings in that regard. Having both of our fathers as financial advisors is somewhat unique, I would say. Mm-hmm. My dad, I think, honestly, he used to joke that in 1973, after seeing some pretty rough markets, he hadn't seen too many stocks increase in value. So he was just simply more comfortable offering mutual funds to his clients, and his regional wirehouse that he was with at that time consolidated with a larger wirehouse, and he was asked to sell stocks. And it was as he used to joke about that, it was a pretty quick meeting. And he and his branch manager at that time left the wirehouse and went out and formed their own firm and affiliated with, at that time, an independent broker dealer that would allow them to sell mutual funds. And, I think that his experience was obviously impacted by the market situation at that time, but his desire to serve those clients and putting those clients first was definitely at the heart of that decision, and the heart of many of the decisions that we make each and every day here at Orion today.
Now, from those early pioneering roots, your business has taken on some size and some complexity, and now there are really two major sides to your business. You have the tech side and the TAMP side, the asset management side. Many see the world of asset management as largely a solved problem today. I think more and more people are turning away from sort of complicated or active strategies and are content to sort of ride the wave of beta. Do you agree or not that asset management is a solved problem? And where do you think future innovations will take place in the world of asset management?
Well, I would agree that the asset management problem has been solved. Nobel Prizes have been awarded for work that's been done to help solve the asset management problem. And whether you subscribe to active or passive investment philosophies, when we adhere to them over the long term, the rewards are typically there for the investor. But the problem is, our emotions are getting in the way. And if you look at, the Dalbar research, it consistently shows that the investor returns are far different than the investment returns. And, research that they've done will show, several hundred basis points variance in average annual returns. And when you look at that, you would have to say as an industry that we need to spend a bit more time understanding how we can help investors be more successful and avoid those emotional decisions that we often make of buying high based on momentum and selling low based on our emotion of fear. And the emotional side of our behavior seems to get the best of us as investors. And simply put, greed and fear are getting in the way of our investment success. And I think that solving the investor problem ultimately means that as we go forward, our educational backgrounds and skill sets are going to look really different than they do today. In the future, I think we need a lot more people working with investors that have social science backgrounds as opposed to finance and accounting backgrounds, like myself.
Well, that's good news. That's good news for the job security of myself and people like me. So I always love to hear that. Now, Eric, insofar as investment management is somewhat of a solved problem, or at least it's a simplified problem, I think at this point for long-term investors, what do you see the role of an advisor as being in the coming years? It sounds like behavioral coaching is a big part of the value proposition. Are there even things beyond that? I see some financial advisors paddling into waters that I would almost call life coaching, being sort of a holistic quarterback for a person's wellness broadly. Where do you see financial advisors adding value in the years to come if it's not around picking stocks?
Yeah, and before we get to the years to come, I think if we look at what we're doing right now, in many ways, we're somewhat embarrassed, so to speak, as an industry, right? We have, RTQs or risk tolerance questionnaires that are 10 questions or less, and they're immediately followed by a score and an asset allocation. And that ultimately doesn't help the investor feel understood. And we've got to look beyond, simple risk tolerance questionnaires and get to the behavioral aspects of what will allow us to be effective coaches and effectively make better behavioral decisions to solve that investment problem in very different ways as we go forward relative to what we're doing as an industry today. And, getting to the core behavioral components of what an investor needs is I think right at the critical juncture for us. And, at a high level, you see firms attempting to do this. Harold Ivinsky is well known for, creating the mental accounting, the buckets of money type of an approach. And those are great steps towards helping solve, real behavioral issues that investors face with their portfolios. And I think as we do look forward into the future, we're going to see an industry set up around behavioral advice. And we need to spend a lot more time understanding the core of what makes our investors tick, their behaviors, what defines a successful relationship. And then we've got to leverage technology to help scale this. We're at a point where, there are over 10,000 baby boomers, approaching retirement each and every day for the next decade. And, this is an area where, we should be able to see, some AI step in with algorithms to prompt advisors with suggested relationship action items, that span that advisor client relationship so that we're effectively meeting people at their level, so to speak. Is the investor a delegator, or do they need a consultative relationship? Those types of things are going to be really important for us as we move forward as an industry to become effective behavioral coaches, again, trying to solve that investor problem as opposed to strictly solving the investment problem.
So I think you said a couple of really wise things that I want to run with a bit. One of the first is, I think the advent of technology, central banks, central banks that are intervening more active governments. I think if you look at last year as a microcosm of investor emotions, we lived through an entire emotional lifetime in 2020, like fear, greed, and everything in between in the space of less than 12 months. And I expect this to persist. And so I think that the advisor's role as a behavioral coach and a decisional guidepost is just going to get more and more important as things just move more and more quickly. I mean, we were in a bear market seemingly overnight, and then just as fast, we're right back into, buying with both hands. And so people aren't equipped for that sort of whiplash emotionally, and we need to be well positioned to help them out. And then the second thing you talked about was applying these things at scale, because there is a lot of enthusiasm out in the industry for behavioral finance. I mean, people are hungry for these messages. I think where we haven't gotten as an industry yet, we've got adoption. I think we have the philosophical and educational underpinnings of a good science. I think what is lacking now is application of that knowledge at scale. And that is where I think you and I are in total agreement that the exciting stuff happens going forward. So Eric, given how complex your business is now with these, the tech side, the TAMP side, and everything in between, how do you think about your next dollar of spend? What does your decision process look like as a CEO when you're deciding where to spend your next dollar?
Well, at Orion, we're focused on tech enabling that advisor client journey. We've divided that out across 4 pillars, if you will, from prospect to plan, to invest, to achieve. And as we look at the the jigsaw puzzle, so to speak. Strategically, we look for areas that will not only help us create operational efficiencies and additional scale for our business, but we also are always looking for technology that will help improve that client experience. And there are a lot of really exciting things that are out there that we look at, but it has to not only be the right fit from a strategic perspective, but it's also got to be a right fit from a cultural perspective. And oftentimes, when you look at companies, you will see the core of what you're looking for, but the companies that we get really excited about are companies that are doing things beyond the core of what we expect, and they're operating in very unique ways. And I'll give you an example of that. When we had the opportunity to purchase the Advisor financial planning business, they were certainly well known in the industry as of a next-gen financial planning technology. But what we saw was not only the financial planning technology capability, but the ability to offer a next-gen client portal experience. They were doing things with their client portal that were well beyond what we had done with our traditional or legacy client portal. And they were leveraging that client portal technology in a way that we felt was best in class in the industry. And when we find those types of hidden gems, so to speak, and surprises, it gets us really excited about not only leveraging the expected capability, but looking forward, it creates an opportunity to have a very innovative development roadmap that we can bring to the advisors that we serve.
Wonderful. So I first became aware of you a long time ago when I put out a call on Twitter saying that I had sort of two go-to fintech futurists. I had, two good friends who, when I want to think about the future of the industry, these are the two folks I go to. And I said, who else should I know about? And your name came up a number of times. And that's where I decided to follow you on Twitter, where you subsequently let me down by never, ever tweeting. But nevertheless, I did follow you there. So
I'm making an effort, Daniel. I am not a huge fan of, doing things on social media, but from time to time, I will get out there and tweet something. But I apologize for letting you down in that regard.
It was sore disappointment, but no. So here's your chance, Eric, because you are a huge disappointment on Twitter. Here's your chance to share your wisdom with the masses. When I read articles on the future of fintech, it all sort of starts to run together, right? It's blockchain and machine learning and open banking, all stuff I love, like all stuff I'm very high on, but some of it starts to feel samey. So from where you sit in a position of authority with a checkbook to make actual decisions about the sort of fintech or wealth tech that gets adopted, what's sort of a sneaky trend that you see coming that's maybe not getting as much coverage as some of these higher profile trends?
Well, I'll tell you, innovation is always exciting, and things like, Bitcoin and the underlying accounting technology, blockchain that supports Bitcoin have certainly been exciting developments in, financial services and in our space. And I love to think of technology as being the great equalizer. It not only makes our lives easier, but great technology also has a tendency to create additional transparency and drive down costs. And, when you look at what Robinhood as a brokerage platform did by, being one of the first platforms, if not the first platform to remove the friction point of trading fees from their model, then we subsequently saw last year, Schwab, TD Ameritrade, and Fidelity, remove trading costs from their platforms. It introduced an opportunity to fundamentally change and evolve our industry. And it's not getting a lot of press, but we've talked about historically investors in making investments in stocks, and then we evolved into mutual funds. Those mutual funds evolved into ETFs, which gave people not only immediate diversification and broad-based exposure, but you can trade those portfolios during the day on the exchanges. And removing the friction point of trading fees has introduced that next evolution in a very big and significant way. And I think that stock baskets, or more personalized and tax efficient ways to invest, are going to become something that is a very big deal and a very big part of our future. It allows investors to express ESG preferences. We can customize or personalize those direct indexes and emphasize themes that are important to us. And if you look at it, there are 5 really big acquisitions that have happened here in the past 4 months. You've had Schwab purchase Motif. You've had Morgan Stanley purchase Parametric. You've had BlackRock purchase Aperio, JP Morgan buying 55 IP, and Goldman Sachs buying Folio. And, those are all examples of, this very large trend taking place where fundamentally as an industry, we are evolving past these highly structured and non-personalized products, if you will, into customized and personalized indexes. And I think that that's not getting the press or the attention it deserves. And I think it's a huge, huge shift that is taking place in our industry in a very big way right now. And, outside of financial services, certainly there are a lot of technologies that are exciting, that are game changing for us. And as a provider in the fintech space, we can look at what those companies outside of financial services are doing that create great user experiences and allow people to personalize and customize things, and figure out how do we bring that to the experience of our investors inside of financial services, ultimately, again, focused on helping our investors solve that behavioral problem that by and large, we're failing with right now.
It's so interesting. I think there's these parts of the world of personal finance that get adequate attention, and these parts that are just not as sexy for whatever reason. And tax management seems to be one of them. People are so irrational about taxes, right? I mean, they ignore tax management despite the fact that it has a material impact on their ability to meet their goals. People are almost upset about having to pay taxes when they've had, tremendous gains, which doesn't make a whole lot of sense. So I think people are really inefficient. Like, we're wired inefficiently around tax management and tax alpha. So I think there is a huge opportunity there. And, I think from a behavioral standpoint, there's huge upside to direct indexing as well. I think the more we can personalize someone's investment choices, the more it feels like theirs, the less it feels like a video game, right? Just numbers going up and down on a screen. The more it reflects their values, their beliefs, their thoughts about the world of business and their ethics. I think that the more we can make that portfolio look like them while still providing adequate diversification, I think the better behaved people will be. So I think there's a host of behavioral benefits there. Now, Eric, you mentioned Robinhood, which has certainly been in the news a lot lately, but they were actually in court trying to litigate this idea that perhaps they behaviorally made their tech product such that it would induce people to make poor decisions. They're doing things like confetti popping cannons and things when you make a stock purchase. They're giving free fractional shares when you sign up. And there's a pretty robust debate around whether or not they are doing something good in inducing young people to start trading and getting into markets and learning about markets, or if they're doing something bad by inducing people to do things like overtrade and speculate. So how do you think about Orion's role when it comes to incorporating behavioral thinking and decisional thinking into the way that you actually design products? Is it your job, is it your responsibility to design products in a way that will lead to good client outcomes?
Well, hearing the description of Robinhood's platform in that regard, it reminds me of the popular Netflix show, called The Social Dilemma. I'm not sure if you've watched that with your kids or not, but it highlights essentially the negatives, associated with the digital age that we find ourselves in, especially around social media and the impact that can have on our behaviors. And I like to think that we live in a world where we can take this knowledge, a powerful knowledge about the way that we're wired to think and behave, and fundamentally use it to drive better investor behaviors. And that starts with understanding the investor better than we do today, creating user experiences that reinforce positive behaviors and ultimately drive better investor outcomes. I'll give you an example of that, and I think that historically, we, as an industry, if somebody wanted to weed out things that were negative social situations that they wanted to screen from their portfolios, they could do that. But what would ultimately drive a better long-term outcome for an investor would be to help them invest in things that they care about, things that they believe don't just screen out the bad, but will impact the world in a positive way. So if we can help investors, for example, design an index of S&P 500 companies that have diverse boards that they feel will, help those companies drive better long-term success than boards that are very traditional and stodgy and are not made up of diverse members, then I think that we can drive better behavioral outcomes for investors. And what Robinhood had attempted to do, I actually really love it. I love what they've done to democratize investing. I love what they've done to get people to invest early. I think that, again, you've got to give them a lot of credit for removing the friction point of trading fees from our investment models. And ultimately, they could be credited for this next evolution of advice as we move more and more towards these personal indexes that have a huge opportunity to be customized in such a way to drive better behavioral outcomes for our investors that we serve.
So I want to shift gears here a bit and talk about leadership and sort of the war for talent in this post-COVID era. You and I have worked together now for 4 or 5 months, and we've never met. And we're unlikely to meet for a further 4 or 5 months. And you helm an organization with over 1,000 people that has employees from Philly to Nebraska to Seattle and everywhere in between. How do you think about building a culture and maintaining cohesion and influence in this sort of new work from home reality?
Well, we certainly find ourselves in the midst of this pandemic where we're at a point, oddly enough, where we seem to be able to see, both ends of the spectrum, and our every day, I get up, I turn the news on, and you see the death rates that are climbing higher and higher, and at the same time, we all have hope and optimism about the future due to the vaccine that's now available to us. And my heart goes out to the families that have lost loved ones due to this horrible pandemic that that we're in. And as I look back at 2020, I think from a tech perspective, one of the things that was most astonishing to me was our ability to shorten our tech adoption curve, right? So if you would think back, schools or businesses, as we would evaluate technology like Zoom, we would normally have gone through a span or a period where we would have evaluated that technology. We would have done a beta test. We'd have a small group, of people try that across maybe even a year or two's time frame. We'd come back, we'd evaluate the pros and cons, and then we'd make a decision. And our adoption curve for technology in 2020 went from years to weeks to essentially to days, as many of us left on Friday expecting to come back to the office on Monday and found ourselves working from home for the next several months. But now we're at a point where we use terms like Zoom and Slack as part of our daily lingo. And obviously these technologies are here to stay. But ultimately, we've had to define and adjust our traditional mindset of corporate culture in very, very different ways, in a very short time frame. We at Orion are obviously at a work from home situation today, and I don't see that changing in the future. And what I mean by that is that, as an employer, to attract and retain the best talent in the marketplace, it's absolutely critical for us to continue to offer, very flexible work from home capabilities to our team members as we move forward. And I think that, one of the bright lights, so to speak, is that we had this pandemic in 2020 and not, say, 2010, where these types of technologies were not readily available to us, so that as many businesses can continue on as we're seeing today in a very healthy and supportive way.
Well, I think if I were hiring people, I think one of the questions that I would ask them is, what are the lessons that you learned from 2020? Because 2020 was such a strange year, and there was so much pain and suffering. But I think there were also some lessons learned about what matters and what doesn't, and how technology can facilitate work-life balance. And so we paid a steep cost, right, for all of these lessons learned in 2020. But I do think that businesses and people and families can and should emerge from this year with a better understanding of how technology can facilitate more efficient processes, but also a better family life. And that's something that I'm taking with me. I think there's a lot that can get done over Zoom. And I think that, the table has been equaled somewhat. Orion's headquartered in Omaha, which is a cool town full of great people. I've only had amazing food every time I've been to Omaha and been very warmly welcomed by the people there. But, it doesn't have the obvious appeal of perhaps some of the larger coastal cities. But I think what you're seeing now is that technology is, like you said, leveling the playing field so that smaller secondary markets can compete for talent in a way that they haven't been able to historically when we had to do business face to face. So I think there is some upside. Anything else you'd like to say about sort of competing for talent in Middle America?
Well, you're exactly right. And I used to tell team members that if they didn't like Omaha, we had locations in New York and Seattle and other places. But, right now it's all about work from home. I am typically in the office every day, but I'm probably one of maybe a dozen or so team members that are here choosing to be here in an office facility that has over 90,000 square feet available to us. And so I think corporations in general have an opportunity to completely change the workplace. We no longer may need cubes for everyone or offices, but we may very well need to have some type of meeting areas and gathering spaces for us, collaboration spaces, if you will, as we move forward. And that totally changes our corporate footprint dynamic as we move forward.
Absolutely. Well, I think many of the changes at the business level, I think will be welcome. I think we will all emerge as an economy and as an industry. I think we'll emerge stronger for this. The last question before I get to the lightning round, sort of free association. One of the things I like to ask people, I'm actually going to flip on its head and ask you about your organization. One of my favorite things to ask people is, how are you misunderstood? Or, what's a common misperception about you? And then have a good conversation about why that misperception might be in place. But given that you helm this large organization, what's a common misconception about your organization, about Orion? And we're going to give you a chance to debunk that here today on Standard Deviations.
Yeah, and I would tell you that one of the biggest misconceptions that we have at Orion is that because we support independent fiduciary advisors, that we have a tendency to work with smaller firms. And the reality is that we support over 250 of the nation's RIAs that have over $1 billion in assets under management. We support 5 of Barron's top 10 firms work with us here at Orion, and I love supporting the independent fiduciary advisors, and many of those firms that are listed in some of those large firm categories that I just mentioned, started out with us with only having a couple $100 million in assets under management. And I love being in this space because we squarely see the future as being fiduciary. And we're now having enterprises reach out to us that also see the future as being fiduciary, and they're looking to Orion to provide them, with help to reshape their organizations from being, more brokerage or commission based to being fiduciary based. And the organizations that are willing to step back and really embrace the future as being fiduciary and that type of business model are the organizations that we're really excited to align with and support. And I would just mention that, look, we are a bit misunderstood in that regard, but we're proud of that as well, because we see the future squarely moving to where we're at today.
Yeah. Well, it really brings it full circle. We talked about your father's pioneering ideas about our industry and how he came to it from a client-centric, client-first point of view. I think that that we continue to skate to where that puck is going. And I think that DNA lives on and is still very, very vibrant at Orion today. So thank you for bringing that full circle. So Eric, before we close out, I got to warn you, I've already roasted you for your lack of Twitter involvement, and things are going to get a little contentious here, because here in the lightning round, I'm going to put you on the spot and I'm going to ask you some tough questions, and you just have to be brutally honest. You have to tell me the first thing that comes to your mind. Are you ready?
I am ready. Let's go for it.
Okay. I sensed a little trepidation at first, but then let's go for it. Let's go for it. Seemed resolved. I like it. So you and I attended the same undergraduate Institute of Higher Learning. I went on to get a PhD from that same Institute of Higher Learning. You went on to the University of Utah to get your graduate work done. So tell me here today, are you picking the BYU Cougars or the Utah Utes? You can only love one. Which will it be?
I am a huge Ute fan. I love the Utah Utes.
2 strikes. And this on BYU's. BYU was within 1 yard of a perfect season. And I feel like
Boy,
your lack of belief in them was the difference, I feel.
I don't think so. I cheer for the Cougars unless they're playing the Utes, and then I do bleed red. So
Fair enough. We will have an excellent rivalry next fall when they get together. You and I both have some connections to Utah, which is known for many things, but primarily known for, of course, fry sauce, which is this glorious combination of ketchup and mayonnaise and a few other spices. Eric Clarke, are you a fry sauce guy? Yes or no?
yes, absolutely love fry sauce. I think I was at Hires there by the University of Utah campus the first time I was exposed to fry sauce, and I've loved it ever since. So I would say yes.
I too remember my maiden voyage with fry sauce out in Provo, and being from Alabama, I had never been exposed to such an incredible condiment. It is highly recommended to everyone listening. We've talked a lot about Spotify as sort of a vehicle for having good conversations about investment management. You are a big Spotify listener. What was the most unexpected artist on your Spotify end of year wrap? So who are the people going to have their mind blown that Eric Clarke listens to on Spotify?
Well, being located in Omaha, Nebraska, it would probably be most surprising that I'm a huge Jimmy Buffett fan. I love his music, and maybe it's a way for me to escape and imagine being on the beach somewhere. But I love Jimmy Buffett music.
So a landlocked Midwesterner listening to songs about his toes in the sand. I like it.
That's right.
And then the last question, what's something that few people in the industry would know about you as a person?
Well, one of the things that I do every week, I'm a teammate's mentor, and so I mentor. Right now a senior in high school, but I've been mentoring him for just over 9 years. I'm a huge believer, in coaching and in mentoring. I know I've had a lot of great mentors in my life, and I like to pay that forward through a school-based mentoring program here in Nebraska called Teammates. I'm not only a Teammates mentor, but I'm on the Teammates board here locally for the Millard School District, which is the school district that the public school that I attended and graduated from here locally. And it's just a way to give back. And I think that while we all give back in unique and meaningful ways, hopefully it's probably something that to me brings me a great deal of satisfaction in my life in a very unexpected way. And because we do it here locally, probably a lot of people in the industry don't know that we're involved with the Teammates organization to the extent that we are, but we have right at 36 Teammates mentors here at Orion that each and every week give an hour of their time to go into the local school district here and provide mentoring help to typically at-risk school-based students. And I'm really proud of what we've been able to accomplish as an organization, and really appreciate the relationship that I have with my mentee.
Fantastic. My parents actually met and fell in love as part of a mentorship program in Big Brothers Big Sisters in college. They were both mentors, and that's how they met. And I think that's a fantastic way
Awesome.
way to spend your time, and a fantastic way to meet your life partner. So Eric, thank you so much for your candor. Thank you so much for your insights and all that you've shared with us today. If people want to learn more about you or your organization, where would you point them?
The easiest way to reach me is just going to orion.com. You're, free to learn more about our organization, but to the extent that, I can be helpful with anything that we've discussed here, or if there are additional ideas or feedback, things that you'd like to share with me, please feel free to reach out to me on Twitter, of course.
Yes, on Twitter. No, just kidding. Yes, thank you, Eric, so much. It's been wonderful, and I'm sure everyone's taken a lot away. So thank you so much.
Great, thank you, Daniel.
Thanks for tuning in to Standard Deviations. If you can't wait till next week for more behavioral finance insights, visit www.orion.com. All opinions expressed by Dr. Daniel Crosby and podcast guests are solely their own opinions and do not reflect the opinion of or endorsement by Orion and its affiliates, subsidiaries, and employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.